option X tools. Okay, what is option X tools? That we are going to discuss now. So here you can. So we have the dashboard called option X. You guys can see here in the option X dashboard, those who want to understand the complete option X tools, maybe it will help you a lot to understand the option X tools in a right way. You guys have some knowledge, or some guys are learning now, or some guys have a good knowledge in the options market. But are you guys connecting the dots to make the profit out of it? That's the question here. So after learning also, I know PCR, I know implied volatility, but how effectively I am using those tools, that's the matter here. So that I'm going to explain by connecting the dots from the different tools, okay, in the options market. So first what we will do, we'll go to options X and click on monthly option dashboard. In this monthly option dashboard, here you can see PCR, option pane, IV analysis. These are the powerful tools which everyone should know when you're dealing with the options market. Okay, and we will train you on this in and out of these two. So first one, if I click on PCR, see the PCR chart get appeared. So it looks very clumsy. So we can't do any analysis in this clumsy chart. So what we will do, we will drag this one. Okay, we will drag this one, and the PCR chart will be get zoomed. And now the yellow line, can you see one orange line is called put call ratio line, and the yellow line is called closing price of Nifty 50. That is not at all required. Okay, I'll just removing that. We got only the closing, PCR values here. Many of you guys already knew what is RSI, right? RSI is overbought and oversold. When it hits the overbought, it will be downtrend. When it hits the oversold, it will be uptrend. So similar to RSI, we use the PCR indicator. Okay. So here, what I will do is I'll draw one tool, one level of like this, and again I will draw one line here like this. So can you see in the PCR chart, whenever the PCR comes towards it down, it taking a support at this level, here or here or here or here. Whenever PCR going uptrend, see it taking a resistance at this level. So then what does it mean? What it represents? Higher the PCR tells the downtrend. Okay, higher the PCR in the sense, first you should know how much we measure the PCR. Maximum in the Nifty 50 we measure 0.3 or 4 to 1.5 or 8 is the maximum we measure the PCR. That level is works, that's the maximum 1.8 or 1.9. That is the highest level we measure the PCR. Whenever the PCR comes in this chart, 0.7, again 0.7, again here 0.7, again here 0.6, 67, 69, and again 0.67. So 0.7 or below, 0.7 or below acting as a major support in the PCR level, and above 1.5, here 1.4, here 1.32, again here 1.39, 1 point again 39. So above 1.39, it means you can take as a above 1.35 acting as a resistance, 0.70 acting as a support. Okay, support. Now, as a trader, how I can efficiently use the PCR to lock my trade, okay, to trade in the market. So this tool is one of the best tool to take the options entry for the 2 to 3 days or 5 days time with a boom. That's that what we call that as the impulsive move, right? Impulsive moves, to take the impulsive move trade. This works very beautiful. So I'll show you. I want you guys to remember one day here. So if we see this chart, 15th February and 19th Jan, 15th February, and the another date was April 5th. Okay, so 15th February, April 5th, 5th of April, and 19th Jan. Okay, 18 and 19th Jan. Sorry, 18th Jan. So these 3 dates I want you guys to remember. So first, let's go to the 15th February. What is happening in the market when it touches the resistance? Okay, when it touches the resistance, how you can able to execute your trade in the market, how the moves has been respected. Now I'll go to the charts and I'll show you the 15th February chart in the Nifty 50. I'll remove RSI, which is not required now. So here you can see this is the Nifty 50 daily candle. Okay, this is the Nifty 50 daily candle here. So where is the R 15th February? That you have to mark it. 14th, 15th. This is the one. Okay, I'll mark this candle as the 15th February when PCR touch the resistance level. Okay. Now I'll go to the market structure. See, market was what exactly the market was doing. Market made the low, again it made the lower high. Then again it made the lower low till here. So after this low, we are in this lower high we are. Then this low we are trading. Now what happened? My PCR telling me market is completely a downtrend and PCR telling me overbought in this candle. When it telling the overbought in this candle, what is supposed to do? Shall I go and take the entry directly by taking the PCR confirmation? No, you should not do that. You have to take along with the price action confirmation. Price action is nothing but no need to learn anything, just a candle confirmation. It's a kind of, let's say you can take the red candle confirmation after your overbought of the PCR. So here, if how many of you don't know this pattern? I don't know, but this we call it as a counter attack. See this green candle which has been closed open at the bottom and closed at the top. This is completely a buy side. And the next day, what happened? It's a huge gap up. It's a huge gap up, and it just slightly gone up, and it came all the way from the down, and bears took the control. Bear attacked the bulls. So first bulls are in control, and next day bears attack here. So then what happened? After that one, PCR got confirmation. At the same time, price action got confirmation. Execute a trade just above that candle as a stop loss and keep the recent swing low. Can you see here? This is our target. That is the impulse move we are going to get. See how beautifully the market fell from this level to this level. 1, 2, 3, 4, 5, 6, 7 days. So 7 days means an average 1 week, 2 days, right? The trading days, if you consider 1 week, 2 days, an average you are holding your position. You can see how much it fell. The point 600 points, 653 points in just matter of 7 days. This is the power of impulsive moves along with the PCR levels. Okay, so that is how we go for the trade. So this is a past trade. I don't want you guys to confuse with the past trade showing the accurate results. You can take the latest trade also. When the PCR here, when the PCR latest trade, if you can see when this line was acting as a support and this line was acting as a resistance, at this level when it came towards this level, okay, this level, it almost near to the at this point of the oversold of the PCR. What happened in the market? I want you guys to remember again this date. So 19th April, okay, 19th April we got the PCR almost oversold confirmation. Then what happened at that particular day? You can go and check in the charts. See, 19th April, can go here. This is the 19th April candle. Okay, I'll just circle that candle. So this is a normal red candle. Don't say this is a hammer. It's not a hammer, right? It's a normal candle. And next day we got a doji or kind of spinning top. Again we got a pure red hammer confirmation towards the buy. Then we got the green hammer confirmation. What not you get? Everything you got the confirmation. Go and execute a long trade here. Okay, take the entry right after closing the red hammer. Keep just below that hammer is a stop loss, and see you are going very beautiful profit with the 1:2. How much reward you are running currently? 1:7 times reward with the help of PCR. So this is how you connect the dots, taking the advanced the tools of option X and connecting into the live market. So these tools works very beautiful if you have an idea how to execute in a right manner. So we will teach you in and out of these tools, not only the PCR, we will teach option, pain analysis, this pain line, how to understand. We just entered into the new expiry. If you select the previous expiry, you'll get the pain line. See, these pain lines at the time of expiry, the pain line and the spot line almost, meet each other. Why? What is the reason behind it? Who is the institutional guy placing these orders? How much of money they are placing? So the pain line will tells you where the pain is standing for the big players. So that we will take you the training. And IV analysis, implied volatility analysis, we will take care of the training. So this is one of the best analysis we can do in the options market. Then comes to the open interest. Which strike is having how much OI? Strike wise OI in the bar charts you are going to learn. This will helps you to understand the markets in an effective way to identify the support and resistance by marking the open interest. Okay, this act as a resistance and another, the chart, the here, see, if you can see the strike prices which we are seeing here, all the strike prices is having a call open interest is very high. You can see the call OI here. So call OI is very high. And when the market goes at this level, it try to, it try to take it as a resistance, and it started falling, right? It started falling from that levels, 17,900, 850, 800, like that. So those open interest, change in open interest, everything we will teach you in the complete training session. So this is a change in open interest in intraday. So how much on fresh money, this you can take it as a fresh money, which is strike price is flowing. So fresh money is flowing on this particular strike price. You can see 18,000 strike price, the fresh money is flowing. So again, this you are going to understand. So this is how we understand all the tools of complete tools of Traderscockpit. The OptionX